Hi, good morning, everyone, and welcome to a New Hampshire Business Review webinar. Today we are talking about the future of office work and commercial real estate trends and what is happening out there in commercial real estate right now. I am Ernesto Burden. I'm the publisher of New Hampshire Business Review, and our sponsor today, without whom we could not do this, is Spark Offices. So thank you to Spark Offices, and let's jump in and take a look at who we're going to be talking to. Today's panelists are Bob Rohrer, Managing Director and Principal at Colliers, New Hampshire; Chris Duhaime, Creative Director of Pivot Creative and owner of Spark Offices; and Christian Stallkamp, Senior Broker at the Boulos Company. So with that, just a few things quick to say. We're obviously, after a year of remote working, and also a spike in e-commerce and warehousing requirements amidst the pandemic, there have been a lot of things happening in commercial real estate in terms of demand, in terms of rates, and in particular today we want to take a look at what demand for office space will look like in the coming months. Take a look at some trends and dive in. So with that, let's hear. We're going to hear from each of our panelists independently, and then they will all join us for a question and answer period. And during that time, you as the audience, please know that you can use the questions function in the GoToWebinar control panel and submit questions. We'd love to have them. Let's make it a good discussion. And let's start off with Bob. Welcome, Bob. I'm going to hide myself and leave the stage to you.
Thanks. I'm Bob Rohrer. I'm a principal and managing director at Colliers in New Hampshire. And I've been in the market for over 27 years. We specialize in office, industrial, and retail, and we also have property management as well as finance capabilities. Thank you very much for tuning in, and we look forward to a nice conversation.
Okay. Bob, before we move on, anything that you're seeing top level that maybe you could walk us through? You know, give us your sort of limbing of the market right now. From
sure. I know the topic is office, but the market is right now very interested in industrial and warehouse distribution. Particularly, has seen a growth through the pandemic and through to today. It's been really eye-opening to me, having spent that long in this, as long as I have in this market, to see the hot market for industrial space, whether it's warehouse distribution or flex space. Flex space being a term we use to describe companies that have an office and a warehouse component. From the office side, you can't escape the conversation on a national level of office users utilizing a work from home platform more readily than they have in the past. Certainly that was something that was growing pre-pandemic, but was exacerbated by the pandemic. So New Hampshire, as far as we can tell, is still in a wait and see mode in terms of what type of overall impact the pandemic will have on needs going forward. There's been a slight increase in the vacancy rate, but we anticipate that could increase over time as companies' lease terms come to fruition and they start to determine what their office is going to look like for the future.
All right, awesome. Thank you, Bob. We will have you back up shortly and we'll dig into all of those topics more deeply in the Q&A section.
Sounds great.
Next, we're going to hear from Chris Duhaime of Spark Offices.
Hey, Ernesto,
obviously,
how are you?
Very, very interesting perspective on the return to the future office work.
Yeah, absolutely. So yeah, my name is Chris Duhaime. I own Pivot Creative, which is a marketing agency located in Manchester. Additionally, I also own Spark Offices, which is we like to call a collaborative workspace, basically a co-working space, also based in Manchester. We offer small businesses, entrepreneurs, career-driven executives that are looking for an opportunity to get out of their house and have a nice office location to get some work done, to meet with clients, maybe to use our private office. Our focus really is on bringing a really community-centric common space for people where they can learn, grow, and hopefully grow their business to their own spaces. So I'm really excited to be here and talk from the co-working perspective for this meeting.
Great, thank you, Chris. And finally, Christian Stallkamp. Hey, Christian.
I understand, and thanks for having me. My name is Christian Stallkamp, and I'm a senior broker at the Boulos company, and I've been practicing in New Hampshire, Mass, and Maine for the past 14 years. I live in Portsmouth, 3 daughters, and primarily most of my work is geared around the seacoast, but obviously expand out into the different states. The interesting thing is, if we're Boston brokers, we would typically say we're specialized in retail or office. Up in the seacoast and in New Hampshire, with commercial real estate a little bit more scarce in terms of density, we're more generalist. And through this pandemic, it's been interesting to see the different asset classes change over time in this pandemic, and it's been good to be able to be a generalist than if I was focused on retail, because all the asset classes are humming, but they're all humming at different gears in essence. But it's definitely a really dynamic market. The changes have been warp speed. It's just been amazing to see this past couple of years, as Bob had mentioned, the push towards industrial, and also to see the office market change. So it would be important, and interesting to go into conversation of the office and of the industrial to point out some of those characteristics or trends, and look forward to continuing the conversation here, and definitely feel free to mention any questions to us, and hopefully we can address them. So look forward to it.
Great, thanks, Christian. Why don't we have everybody come back up, and let's dive into some questions. I will get us started, but obviously for those listening, please do feel free to jump in. I think the first thing that I think probably everybody's curious about is, from an office space perspective, Chris, your business is really focused entirely around office space and providing a co-working space for people. Are you seeing demand for that? Are people who have been, because we're partly hearing the statistics that suggest a lot of people wish they could keep working from home. Some people miss working in an office. Who's coming to you, and how many people are coming to you asking about office spaces?
Sure. So I think over the last few weeks, months, we've seen a lot more activity just based on people getting vaccinated, numbers starting to go down. I think there is definitely a high level of people that still want the ability to work from home, but sometimes you just need that flexibility to be able to go somewhere else 1 or 2 days during the week, just to kind of get a fresh perspective. And to maybe get away from things that may be distracting at home, like pets or kids or husbands, wives. Really essentially just getting focused on the business that they need to do. So we've seen all kinds of different types of people. We've had a few from Boston whose their actual office hasn't opened yet, and they're based out of New Hampshire, so they don't want to work out of their house, so they want to work in an office environment. So we're seeing some of that. We're seeing small entrepreneurs that want just like a virtual office, in addition to being able to go in every once in a while. People are starting to meet in person again. So there's a flux of people that are interested in just the conference room for a few hours during the day or the week. So it's really kind of all over the gamut. There's a lot of different types of people that are coming in. And more very recently, I would say within the last even 2 weeks, we've seen a nice little bump in just activity of people being interested in seeing what the space has to offer. So.
Okay, interesting. And I wonder now if we could expand that out a little bit to Bob and Christian, what you guys are seeing. When we talked together the other day in preparation for this call, I think we talked about, in addition to some companies possibly downsizing their office space, other companies maybe needing the same amount of office space just in order to space people out more, and trends like that. So what are you seeing in general in terms of demand for office space right now? Go ahead, Bob.
Sure. I think right now it's still a wait and see game. I cover more of the Concord to Salem to Nashville market, and I would say it's significantly skewed toward a wait and see. Mostly waiting for leases to turn. I think at this point, I can't speak for landlords, but it seems that tenants are focused on continuing with their current lease obligations, but with an eye toward what will happen once they reach the end of their lease. And I think we will see, some consolidation, some changes, as you mentioned, Ernesto. There's certainly a move toward work from home, and a change which will bring a change to what the office looks like. I'm not positive in New Hampshire will be as significant a change as we see in some of the bigger markets. I mean, over the years, and Christian will probably agree with this, we don't have the super highs or the super lows that you'll see in a Boston or New York market, which is a good thing. We have more of a stable marketplace, and I think that will translate into the reaction to the pandemic.
Okay, and Christian, in your area, what are you seeing?
Yeah, what's interesting, when all this went down, we were all speculating, what was going to happen to the office, and would people end up taking more space, as you mentioned, to spread out. That didn't necessarily materialize. More or less, the larger office footprints, and so this would be more cubicles, less private offices. All those groups automatically went remote. And for the most part, our office is here in the trade court. I drive into the office every day and have been since, I'd say, January, February. The larger footprints, the 60,000 square foot footprints for the office buildings have been totally, for the most part, vacant, maybe one to five cars. The office buildings that are multi-tenant office buildings, smaller footprints, 2,000 square feet, those parking lots are full. So that's something to kind of show that the trend of where tenants are currently. But I think the shining light here is that with the vaccine successful rollout, that this is going to change very quickly as companies are going to start bringing employees back to the office environment. And for me, coming back to the office, it was great to be able to ask a question to someone next to me, work through issues, work through problems, and I think everyone's going to find that beneficial to their workplace.
Interesting. And it almost sounds like what you're describing there in those two different kinds of office space are, one would be, these really close quarters kind of cubicle farm kind of office space, or a call center or something like that. And then the other one would be a building with more private office space already, like where people.
Exactly. It's just so hard to manage that larger footprint and the complexity of COVID and how it spreads. And I get it. It makes sense. All the tenants what we're finding here in our market in the Seacoast, all the tenants, they're all paying rent. Everything is moving forward in terms of tenants keeping their spaces. To Bob's point, it's more of a wait and see. With any sort of lease rollover coming due, the tenants that come into the marketplace with the larger footprints, we're finding them looking to either staying in place for a year or two and saying, hey, for flexibility from the landlord. So that's what we're seeing for the larger footprints, but in the smaller footprints, we're seeing a lot of more activity on the smaller footprints to that effect.
Okay. And Chris, within your space, do you see are people looking for privacy within the office space that they have, or a lot of separation, or are they more comfortable with I guess what I used to think of as a co-working environment, not Starbucks, but.
Yeah, I would say they're getting more comfortable in more of like that open space concept. But it's, there is still a pretty decent sized demand for just, privacy and being able to go into your own space and close the door. One of the things we're trying to do here, and this was, kind of pre-pandemic, was to create more of an open environment and make it, like I said, more community feeling and things like that, which is not ideal for this scenario. But I would say it does. There's always room for improvement and growth, and part of our strategy for our office space is to kind of grow and figure out what our members actually want and what they want to be whether it is private offices or maybe more Zoom, we call them Zoom rooms or phone booth rooms, someplace where they can go and just, take a private call and then go back to their desk afterwards. So we're seeing a mix for sure.
Interesting. So I guess with your business directly, Chris, because you would be making the call on this, and then maybe with the people that Bob and Christian, you guys are working with, have you heard or thought directly about requiring people to be vaccinated in order to come in and use an office space? Are landlords talking about that right now as a reality?
I think that's going to be a case-by-case basis. I don't think landlords, I think they're going to be able to control their common area space and require face masks in the common areas, but I think from an officing standpoint, that's going to come down to the individual user. It's a great question, because I think that dives into where do the CEOs and the presidents of companies, people running the companies, take this? Do they look to their employees and say, you can run survey after survey, and depending upon which one you look at, you can see that some employees are anxious to get back to the office, while others like to have kind of a hybrid idea, and even a smaller number, believe it or not, from at least surveys I've seen, want 100% work from home. But it all comes back to how do the people that are running the offices react to the pandemic and the continued masking and other restrictions.
Yeah, and from my perspective, it would be really difficult for us to have everybody sort of want to be vaccinated in there. I think that would be a difficult thing for us to sort of mandate at this point. We've been open pretty much for the majority of the pandemic. So, obviously being safe and cautious and clean and wearing masks and all that, but to ask somebody to come in and to be vaccinated to work out of there would be difficult for us, I think.
Yeah, I think that's an interesting perspective, because it probably reflects the same kind of calculations that every business owner or office manager is going to have to make as well. Is what would the alternative be?
Right, exactly.
So if somebody said no. We have a couple questions from the audience already that I wanted to touch on before we got past the topics that they were about. One is a bit of a predictive question, so I don't know if you guys can do this, but maybe you can. Someone asks, how high will the vacancy rate go for office space this year and next? Do you have a sense of that?
Bob, do you guys, we can both comment on it. Do you want to go first on this one?
Sure.
Crystal ball, get your crystal ball out.
I have no crystal ball, otherwise I'd be in the Bahamas right now. But I would say that, I've looked at some, like I mentioned earlier, some of the national statistical data on where, and crystal balling it from that perspective. And I've heard everything from 20% vacancy rates that'll reach 20%, which would be rates that weren't even seen in the 2007, 2008 period, the Great Recession. I think New Hampshire is going to see some pullback. Our statistics show that we're at about a 6% now. I'm sorry, 9% in office, and I think it could go to 15%. But we were at a fairly high occupancy rate prior to the pandemic in the state. So I think there will be some pullback. I think you will see some, as Christian mentioned, some of the larger officing opportunities take less space and rely on a hybrid type model, but I don't think it's going to be as significant as perhaps in some other markets.
Yeah, I would concur that. I mean, you're hearing markets down in Boston and in New York where companies have just given up entire floors. I don't think it's going to be as dramatic up here in the Seacoast, but we have seen a significant uptick in terms of property listings coming on. Our company typically just runs the vacancy reports once a year. It's pretty intense and labor intensive, but we're actually looking at doing an update to that vacancy just to see where the numbers are, because it's definitely been a change. Here in the Seacoast, the office, this was in like January, let's say, when we did our final numbers, was in the Seacoast was 10%. As a data point, 10 years ago, the vacancy rate was 18.5% here in the Seacoast. So to the question, I do think we're going to see an uptick to that 10% when the metrics come out. And one thing too is, do you count sublease space as vacancy? And in our mind, if you can lease it, is vacant. So that's what we're seeing, the additional product coming on the market.
Are you seeing people looking to transition office space into other kinds of space? I mean, they're, healthcare or retail or you name it. There seem like, or even multifamily residential.
Yeah, certainly we're seeing some of the office space, particularly in the central business districts, be converted, or in the mill yard. Also, there's a push to multifamily. I would say retail is probably going to go through a similar, I've heard in other markets that some retail is actually being converted into multifamily, and I think you might see more of that. I think retail is going to survive, obviously, but on a smaller scale. I think that was a direction that we were headed in anyway. It's just all been exacerbated by the pandemic, and everything, the timetables have been just ramped up. So yeah, I think that's some of the changes. But I don't see retail growing, and I certainly don't see office growing more square footage in the near future.
Yeah, to Bob's point, Boston, the suburbs of Boston have seen a real influx in terms of R&D and clean room space for obvious reasons. We haven't necessarily seen as much of that coming into our market, but there are some tenants running around now. In terms of conversions, our company up in Lewiston, Maine, ended up doing a mall conversion to industrial. So that was an interesting conversion in the pluses and minuses of taking a mall and converting it into an industrial. As an example, you wouldn't think of slab thickness, but that's pretty big deal when you're talking to a manufacturing company. So the slab thicknesses in these malls typically weren't as thick as you would want in a manufacturing facility, and column spacing. So there are challenges in terms of conversions, but the plus on all the malls is you've got these huge parking lots. So what that particular developer did was expand into the parking lot with high bay. So
malls in general are seeing some interesting plays nationally, and maybe it'll work toward our market where it's even multifamily is being incorporated within an enclosed mall setting. So it's an area that's going to see some change for sure.
Boy, that's a really interesting concept. Because we're already seeing educational facilities going into malls and entertainment facilities and things like that. If you've also got living in there, that becomes a neighborhood.
Yeah, good.
That's pretty amazing. One other question that we had from the audience was, and I think this was in regards to Christian, when you were describing large and small footprint. But for small footprint, what are you thinking about square foot?
Yeah, sorry, I should have clarified that. Yeah, I would see a small footprint anywhere 1,500 to 3,000 square feet. Those would typically have more private offices associated with them. The 10,000 square foot footprints of open office, they obviously can have private offices within that, but the circulation will lend itself to more cubes, which makes it more of a challenge to be able to handle COVID. So in our market, our sweet spot here in the Seacoast, I mean, there are the 50,000 square foot single tenant office users, but for example, in the Pease Tradeport where our office is, I would say that the sweet spot for those office users are anywhere from 8 to 15,000 square feet of office would be considered a large office tenant we would typically see. So I mean, hopefully that answers the question, but it's in essence, it's smaller office space that has private offices has seen that demand versus the larger footprints in open office.
Speaking of office size, Chris, you said what square foot is your location? And I think you had said that you're, rather than expanding any given location, your longer term plan would have been to do more, right?
Yeah, so it's actually a combination. So right now we're about 1,300 square feet. And so we do want to expand this location a little bit. That would be the plan. That's like the first plan. But we would like to do other locations that are smaller as well down the road. And in different areas of New Hampshire. That's our ultimate game plan, though.
Regarding larger office footprints, another question from the audience. Should towns consider changing or adding to existing zoning to allow for other uses that might be more marketable, particularly if a community is seeking new development in the shorter term? And I think that sort of ties in with what we were just talking about.
So I guess is the question, do you read the question that if a community is looking to grow its footprint, its commercial footprint, should it consider changing zoning?
Yes.
Yeah. Well, I mean, if you follow the trends right now, I mean, industrial, clean tech would be something I would certainly want to focus on if I were looking to increase our tax base on the commercial side. Whether it changes zoning, that's each community is going to have its own opinion on that. But certainly the areas that right now are experiencing growth are going to be your clean tech, high tech, and industrial and warehouse distribution. I don't know, on the Seacoast?
Yeah, I think the big example here in the Seacoast that we're seeing is the Newington Mall. Right now, there's no zoning applicable for mixed use. And I think that's, really been of interest. But so the town is looking at that. So right now, if you wanted to look and create housing in that zone, you wouldn't be able to do it. So you'd only be able to focus on office or industrial or some sort of reuse on the retail. But I think in terms of looking at taxes and in these communities, if you're having these malls go dark, these large footprints go dark, then what's going to happen to the assessment and the taxes for that town? So if you're not at least having the conversation, I think it could be it could jeopardize the future in that town. So, but with the mixed use development comes a lot of other things and questions to ask and to answer. So I know that Newington has been going through a learning process in terms of understanding what the pluses and minuses would be, but the demand is there. We're seeing significant mixed use developments, not only here in Portsmouth, but actually it's pushed all the way up into Dover. And that would be larger multifamily, which only helps in terms of the supply and trying to keep the costs down. Can you do affordable housing with new construction costs of steel and lumber now? It's challenging, but I think more supply is going to try to help that market.
You guys had talked a little bit about sublease space, and we had a question regarding that, noting that the Boston market has seen a big jump in sublease space, and wondering if there's any indication that New Hampshire will follow suit.
Okay, Christian, you go first.
Yeah, we've definitely taken on a lot more sublease assignments, and to the question, I think that we will continue to see more as the picture is more clear in the next couple months of what tenants are going to want to do. Everybody's going to have to try to make this decision sooner or later. With the vaccine's successful rollout, are they coming back? Are they not? What are they going to do? We've seen modifications of sublease. For example, there was a deal that was inked that was about 25,000 square feet. They've kept one floor and then are subleasing another floor. So, and we've also seen that as almost a game plan for tenants in the marketplace. We call it space banking. So you don't know if you're going to need that space, but you may need it in the future. You can put it up for sublease, 3-year term, 5-year term, and if you end up needing it and growing into it, that tenant would then vacate and you move right into the space. So in terms of strategy, we've actually worked on deals like that in the past to use sublease in the tenant's favor to protect themselves for growth and expansion.
I'd say the majority of the sublease space we're seeing right now in the office market really was not pandemic related. It was in place either prior to pandemic or it had reasons that were more user specific, company specific than the pandemic. But I agree with Christian. We are still waiting to see what happens, and there will be a time where companies are going to make decisions. And I suspect there will be a change in the office footprint. So you'll see some redesigns and some changes in the amount of square foot requirements.
But to add to that, Bob, I don't know if you're seeing too, I can't prove and go to data points for a decrease in rental rates in the marketplace. I can speak to concessions that have been made in the marketplace, but I can't necessarily go to specific data points on deals to say there's weakness in the market pricing. So I don't know what.
No, I would agree, especially on the office, and particularly I'll stick with the office side. I would say that lease rates are trying to hold firm, but there have been, some concessions made by landlords to either retain or to attract new tenants. On the industrial side, we're actually seeing price increases. Something that we haven't, in 15 years, we haven't seen the percent increases that we're seeing right now on the industrial side.
Yeah.
If industrial rates go up or continue to go up and demand for industrial continues to go up so much, does that potentially help keep office rates more stable, just as maybe people convert office space to industrial space and decrease the total volume of available space?
It's an interesting question. I would say that the office product is not all that conducive to much of the requirements. As AI becomes more important and robotics becomes more important, even flex space is requiring higher ceiling heights, where you used to be able to get away with 14 or 15 for a flex space square foot heights.
Yeah.
You're now looking at 20 feet clear. Most companies are requiring that from a machine point of view. So the office side will maintain its strength, as frankly, you mentioned something earlier, is that as multifamily kind of creeps in a little bit, you'll see some of the vacancy be pulled off the market and repurposed. That will continue to shrink the size of the overall portfolio, which should impact pricing.
Okay. This is a question I think they could go to all of you from slightly different perspectives. Are there any new office projects in the pipeline, in your particular pipeline?
I reached a developer yesterday just to take the pulse prior to this call, and he's got a couple projects that he's looking at putting a shovel in the ground on.
Yeah, right now, cost of, as Christian mentioned earlier, the cost of construction is increasingly out of proportion to lease rates. And so I haven't seen any straight office. There's a couple of developers over in this market that are saying we are ready to go for what we'll call some more of the high tech uses. They haven't put shovel in the ground yet, but they are preparing to do so.
The interesting thing would be to look at industrial, as I was mentioning, that we've never really seen an increase in industrial pricing like this before in terms of a lease rate. So as that lease rate keeps going up, it's going to start to trigger hopefully some more industrial development. But the issue has been the cost of construction. You couldn't build it for what the tenant was willing to pay for it.
Right.
So
the economics
now, yeah, it just didn't work. So now, we've done a couple of deals that are north of $10 a square foot on a triple net basis for industrial, which is a very strong number, where market rents could have been, 3 years ago, 6.25, 6.5. So it's amazing, but new construction still is going to be north of that $12 a square foot for industrial. So it still needs to push up. But again, we could hopefully see new development on a build-to-suit basis with tenants in the marketplace that need to expand their business, because without it, they're not going to be here. They're going to move somewhere else. They're going to go down to Tennessee or somewhere else. So hopefully we see it, and more build-to-suits. Probably it would be primarily than spec.
Okay. A question for Chris from the audience, sort of hearkening back to something we were talking about a little while ago. For co-working space, are you adapting to allow for more private offices? If not, how are you adapting for COVID?
Yeah, I mean, that's the ultimate goal for us, is to, in the expansion that we want to do, is to offer more private offices. As far as adjusting for COVID, I mean, we're taking all the protocols as far as like number of people in the office at the same time, spacing out the 6 feet, and requiring people to wear masks coming into the office space. Those have been our biggest adjustments, I would say. And then just generally just being mindful of, who's coming and going from the office. If we, hear somebody that may be coughing, maybe talk to them a little bit and figure out what the next, what their next move is to make sure that's not going to be an issue. So.
And I think more broadly then, the question would be in office space in general, is that smaller footprint, more private offices, is that something that you think is going to be generally looked at? This, I guess, goes back to your data center or call center cube farm example versus the private offices out there at the trade port.
Yeah, the hybrid models, seems to be pretty interesting when a lot of tenants are speaking about that, meaning that, for example, a footprint that they used to be in 20,000 square feet with everybody having their own office or desk or bench style seating. Now they've shrunk that square footage. For example, one deal went to 6,000 square feet. And what's interesting to see is that the hybrid model, nobody really essentially has their own private desk. And we saw this prior to COVID, that trend. A lot of the larger companies have their own booking system. So in terms of like a technology out there, I'll be in the Boston office on Tuesday, up in Portsmouth on Wednesday. They would book either a private office or a bench or a conference room, depending upon what they needed for their work. So I think we're going to see that trend continue. And for example, that deal that I did, it was interesting to see that was what their employees want. And I think that's a really good take home from this is, you want to keep your employees happy and you want to keep and retain those employees. So what is that that's going to do that?
Interesting enough, we've seen a couple of verticals with especially in the law, the attorneys and legal profession, maintaining the amount of square footage they had done, or been a part of a couple of major law firms that have actually kept the amount of square footage. And so it does get down to, user to user in terms of what they're looking for. But I agree with Christian that we are going to see a growth in the hybrid model where you reserve your office for the day that you're in, and it won't be your own private office anymore.
And that's similar to like what our model is too here at the co-working space as well. It's just, everything's booked online. Everybody's got a good finger on the pulse as to what's available at any time. So.
But what you guys are all talking about there, it seems as though it's something that has a lot of technology implications in terms of what technology needs to be in place to make that work. And is that something that you're seeing this sort of new reality driving is different kinds of technology and infrastructures being required in offices? Just to be able to securely connect to the network or all of the other things that come with hybrid working.
Yeah, I mean, I think it's going to be a question that is going to continue to be of importance. It used to be maybe the third or fourth question a new tenant might ask is, who do you have in the building? What's your data source? Now it's second, and you generally speaking have somebody in tow on a first tour that's going to be checking out the building's data capacity and data capabilities. And with everything moving to the cloud, it's going to continue to go in that direction. That's my take on it.
That seems inescapable. Chris, you were going to say something?
Yeah, I was just going to say, there's a number of different softwares out there that exist for co-working spaces that can be repurposed probably for what you're saying for like an actual company to manage their own employees as well. So there's definitely technologies that exist right now for that.
Another question from the audience is for evaluations on office buildings, do you think we are at peak in appraisal value? And then they must know you, Christian, because they say you might not want this to be the peak.
That's a good question. Post-COVID deals versus pre-COVID deals, it goes back to what sort of comps we can steer towards and look at in terms of data points. And another thing, speaking to that in regards to cap rates, and I think that's what it's driving at is peak value. So because of the low interest rates that we've been experiencing, and from what appears that will continue for at least another couple months, the cap rates will continue to stay where they are. Would be my estimate. But does the investor now think office is more risk or low risk? I don't know. I think. In my mind, if it's a lot of the investment stuff is driven more towards tenant and term and then location. So I think you will always see a demand for that type of product if you have those positive three variables in the marketplace. So in terms of peak, hard to say. We can have this Zoom in another couple of years, and we'll see who called it. What do you think, Bob?
Well, my take is that if I qualify or quantify the calls that are coming into our office, medical office is still in demand, and the cap rates, as Christian mentioned, are still very compressed for medical, especially if the tenant is a strong tenant or a hospital. Industrial continues to be, and I'm sorry to harp on that, but has become a target for investors, when in the past it really was something that was thought of maybe third or fourth along the line. You really used to have office office retail as your two biggest interest levels. Now you're seeing industrial kind of come to the forefront, but you still have your classes. If it's a strong tenant and a strong lease, there's going to be interest. I think the investment side is still fairly strong.
Now, we had talked about, you mentioned healthcare, you mentioned industrial a number of times. One of the other sectors that looked like it was really strong in the Deloitte survey in terms of people's outlook for growth was hospitality. What are you guys seeing here?
I wouldn't want to leave out multifamily, and I'm going to leave that separate. That still is a very strong, particularly in New Hampshire and pretty much everywhere. Multifamily, whether existing or build-to-suits, are still strong in this market. Hospitality, I'll beg out of that because it's not really my forte, but I don't see a whole lot of hospitality growth right now. And frankly, I mean, part of the problem, and you see most of the restaurateurs and other operators looking for labor, and that's right now, to me, the critical path for growing hospitality. Seacoast might have a different look on that.
No, I think you're spot on. I mean, I think that again, we're generalists, so we actually get to work on retail, office, industrial. The hospitality, I guess you would say, in terms of a retail side for quick serve restaurants, we're seeing double drive-throughs. That's a trend. Hospitality, if you want to put hotels into that, post-COVID versus pre-COVID, has been more challenging in post-COVID to be able to get the financing for those projects, because the ADR, the average daily rate for those hotels in the market has gone down. But believe it or not, we are seeing lending starting to open up for those hotels. And if it's a strong market like Portsmouth, major flags need to grow. They need to expand. And if they've got a new flag that they want to put out in the marketplace, they're going to want to do a deal in those markets.
All right. Have you guys noticed any increase of businesses in general wanting to relocate to New Hampshire from other places during the pandemic, much like individuals did?
Yeah.
Okay. Yeah, I think we are seeing some. And again, it's not so much on the office side, although we are starting to see some of the satellite office requirements that has been predicted closer to the employee base, to have a satellite office. We're starting to see some of that, particularly in the Manchester market. And I think on the industrial side, again, we are definitely seeing some interest grow in the New Hampshire market. Again, it has to do with lease rates and cost of facilities. So yeah, we're seeing some of that. Mm-hmm.
Yeah, I would agree to that. In terms of the cost versus, we would see groups coming up from Mass. A lot of it's driven by cost. But just thinking the past couple of months, I've worked some deals where financial services group moved up from Mass. They see the writing on the wall for potential for tax increases. They've always liked the area. All 5 of them moved their families and their business up to New Hampshire. Working with a large manufacturing company out of New York, and he's getting frustrated with a lot of the restrictions in New York. He's just out of New York City, around the New Rochelle area, and he's like, I'm coming up and I want to set up a machine shop and I want to buy a place up here. And the stats are pretty amazing in terms of the residential, how many people are moving from out of state into New Hampshire. It's just staggering. So the businesses have to follow, at some level.
wonder if there's some equivalency there between things like that happening and what's happening with California and Texas right now.
Yeah.
Not to say that we are the Texas of New England, but
it's a great place to start a business in New Hampshire. I mean, I used to live in Mass and came up to New Hampshire, and it's just you're buying on quality of life versus maybe down in Mass. It's a little bit different. Yeah.
So another question from the audience. This one is, have you seen any companies that are going fully remote? And if so, and I think this is really probably a question for Chris, if so, are they offering an allowance for co-working space as a result of that?
So we've seen that a little bit. So we've definitely had companies that have gone fully remote, and they would utilize our space for like just the conference room once a month, once a week. So we've definitely seen that. We've had a few employees that have come in that have been given an allowance from their company to be able to work out of a space just because they're not motivated maybe at home or aren't able to focus as well at home. So we definitely have seen a few people come in for that and hoping to see more. I think that would be a great market for us and maybe not one we initially intended on, but definitely something we're interested in working with. So.
Yeah, we've definitely seen a few companies in our marketplace go fully remote, and it hasn't quite impacted the overall vacancy rates yet, but it's going to.
Interesting. It seems like there are going to be a lot of things to resolve within that fully remote paradigm that people didn't really have to think about during the initial stages of the pandemic, like what do you provide for office furniture and connectivity and all of the things that typically people who are working in an office, if they take a day and work from home, really take care of themselves. But does it become the company's issue?
Right. Yeah, security is huge in terms of clicking on your server and you're at your house. What does that mean for keeping the files and everything safe? I think that's just going to be a huge growth industry, if not it already has, right?
Yeah. No,
my sense of productivity. A company that can measure its productivity, if it's able to save the cost of officing and not slip in productivity or in collaboration and frankly culture, it's an enticing. I'm sure it's an enticing formula to be able to have to work through. If you can maintain those three principles, you're probably all right working from home. But maybe it's because it's my business and I'm a little bit biased. I think that's a tough road to go. I think at some point the office will continue to be a central point for most industries.
I think the culture is an interesting point because I think that's one thing that is missing from just a fully remote working from home company. And so I think that's one thing that we've seen as a reason for people to want to work with in like some sort of flex space or co-working spaces, because they are able to come together, maybe do a few projects together in the same room or in the same office space, and then go back to their regular office at home and still be super productive, but keep that culture going. And there's a lot of ways you can do that on Zoom, but they're not always as effective. So it just gives you a little bit more freedom to do that if you have a spot you can go to.
Indeed. Yeah, it's impossible to, I think, underestimate the impact of culture and somebody's just general quality of life experience and team building.
You can only do so many trivia Zoom calls.
Yes.
I think it's unique with
culture building.
In talking with tenants that have been in the co-working is that even though they're different companies, they like the culture. They're sick of working in their office at home because the kids are screaming and yelling. So they go, and this is where I think co-working has just exploded. They go to that space, they get their office, but they also get interaction with other people. And even if they're separate companies, and they're bouncing ideas and collaborating, and I think that's what makes co-working so unique. And I think that we're going to see out of this, an increased demand for that co-working type style space. So
the social aspect of it will have to definitely play into it. And I agree. I think the co-working space is a good market to be in right now. But I don't think you can underestimate the social need that employees are going to have going forward.
And actually sort of related to that, another audience question is, are co-working clients looking for long-term leases in your establishment, Chris? And then more broadly for Bob and Christian, how is this impacting people's lease expectations? Are people looking for shorter leases, longer leases? What's happening? Maybe start with Chris.
Sure. So we haven't had anybody really ask for like much of a long-term commitment. Our initial commitment is only 3 months, and then we do month to month after that. Our ideal goal is to really grow the companies out to their own locations. Like, there's going to be, it's going to be give and take. Some companies are going to, reduce size and, do some hybrid working from home. Other companies are going to need to grow. And like Bob had mentioned, need that culture to sort of get the company off the ground to a point where they can get their own space, build that culture, and then potentially at some point get the processes and the procedures going to a point where they can maybe go back to some sort of hybrid as well.
Okay, and Bob, any impact on lease terms?
I think landlords want long terms, tenants want flexibility, and I think that's going to be a continued trend. It does come down to the individual requirement, as it always does, and there's usually a push-pull between the flexibility that a tenant wants and the type of build-out that the tenant requires. So the more intense that the build-out's going to be, typically the longer term you need, and that's to be able to allow the landlord to amortize the cost of that fit-up. So I still think that will be the way things go. I'm sure some tenants are going to be looking to do temporary extensions, but generally speaking, it comes down to the individual requirement and what they need to be able to operate within their space.
Yeah, I think that's a good breakdown in terms of pricing and understanding the expectations of the landlord. From Bob, the only thing to add to that is that, for example, in Portsmouth, there's a co-working space called Cove, and it's done extremely well in working on the building adjacent to it. That Cove space is 30 Maplewood, 46 Maplewood abuts it, new construction, and the plan was to expand Cove into 46 Maplewood. We put Fidelity Investments into that bottom space, and there's still another, 8,000 square feet. The demand is back now, so I think that Cove will end up expanding, but we are writing a lease or a deal for a tenant that can also be a part of that Cove experience or co-working experience. So they love that aspect of being able to walk next door and to be able to use the conference rooms. And it's more efficient for that tenant to not put a large conference room and just use it or book it similar to that of the co-working.
Okay. Question from the audience. What do you think will happen to the commercial real estate market if Washington's push to repeal the 1031 exchange is successful?
That's a great question.
Yeah.
And I hope we don't have to find out. For those that don't understand Section 1031, it's essentially the ability to do a like-kind exchange. So you can sell a building or a real estate asset, purchase another real estate asset, and not incur any taxes on the federal level. It's been a way to encourage risk and investment, and it's been a very good tool over the last, I think it's 35, 40, 50, I don't know how long, as long as I've been practicing, been a way that the investment real estate market has operated. Should that be repealed, I think you'll see an immediate break on investment real estate that will take a significant amount of time to figure out how to operate in a new paradigm, but it will change things dramatically. From my perspective, I don't think it'll change it positively, and I hope that Washington thinks very carefully on that.
Yeah, I would agree. It's going to impact some levels of commercial real estate, and in some businesses, all they do is primarily focuses 1031. A lot of models for businesses, like a Dollar Tree, is to develop and then sell, and a lot of these investors use the 1031. So I hope that it is not repealed. And in my mind, thinking of the 1031, the government ends up, you still have to pay the taxes eventually, right? So in reality here, the government's getting a bigger piece of pie at the end. One way to look at it, but hopefully it is not repealed.
Hey, last question I think that we probably have time for, and audience, if you have any more, get them in now. But the thing I was wondering, we talked about culture earlier, and one of the other things that the Deloitte survey brought up was that the culture within the industry itself, in terms of what has working been like for you guys who are working as brokers, for people who are property managers and owners. How has the world looked? I mean, that seems like a very in-person business. What have you done over the past year to make that viable?
Well, we quickly bought and started operating a 3D, a 360 camera that allowed us to do virtual tours, and did them not only on properties that we represented, but on properties that our clients were interested in. So this was, over a year ago. We noticed that business had to continue. Our property management division was still very busy coping with and managing the process of the pandemic, while we were busy answering, again, on the industrial and the office side, what's going to happen next? How are we going to operate within this new paradigm? And the answer was, at least for a short term, and I think it will be part of the process going forward, is virtual tours as a way to set up in-person tours. I would say, I'm sure Christian can add to this, but in-person tours are back. I've done a bunch of them recently, and will continue to do them in the future. There still is, at least in our industry, I believe, the need to touch and feel. And to really visualizing it in person is something that most of our clients still require.
Yeah, Christian?
Yeah, I think that to that, you're right. You lose something on a deal when you're just constantly talking on the phone. When you meet somebody face to face, you can take that quicker to another level by working throughout issues, and also just having a conversation, looking at the person's eyes in front of you and reading their body language, right? Yeah, they might not like this space. Well, what is it that you don't like about this space? Then you miss that when you're going back and forth on email. So I think that getting back to work and getting the masks off, I'm excited for that.
Yeah, me too. Fingers crossed that we're just about there. Well, that takes us to the top of the hour. This has been fascinating, and I really appreciate all of you guys weighing in. I think this was useful for the audience, and audience, feel free to write and let me know. And Chris, thank you for participating, and also for being a sponsor with Spark Offices today.
Sure, no problem. I appreciate the opportunity. Thank you.
And like you guys said, here's hoping that we're very soon to these in-person meetings and masks off and all of that. So thank you very much. And thank you all who attended. Have a great rest of the day.
Thank you.
Thanks for having me.